Let's go. Blockchain crypto gang. Gang, you know me as CryptTalk, and this is my crypto slang. It's been a minute since I've tapped in. A lot of stuff been going on in this crypto news, man. These crypto streets starting to get kind of lit out here. So let's go ahead and start it off with just a quick run through what's been going on with the prices. As you can see right now on the screen, we got Bitcoin at 108,000. So, you know, we're back above 100,000. A lot of stuff's been going on that's been pumping that. And of course, like if you've been paying attention and you've been listening, then you know that the halving, which happened last April, typically we'll see the all-time high around a year and a half. A year and a half would put us in around October for the peak, around there. But of course, a lot of different things with the tariffs and policies worldwide has been kind of changing the atmosphere when it comes to investing. So who really knows? But as of now, we're at 108,000. So Bitcoin ain't going nowhere. The crypto market ain't going anywhere. We're going to continue to see some beautiful things happen within the crypto industry and the crypto market. So 108,000, putting it at a $2.1 trillion market cap. We also got Ethereum, 2,800, up 7% in the last 7 days. We have Tether, we have XRP, which we're going to get into a little bit of that, up 3% for the 7 day. BNB, Solana is up at 5%. Dogecoin, doing a little something. So as you can see, the crypto market is starting to rebound. It's starting to kind of take off a little bit. It looks like Bitcoin is really seeing the most of, you know, how this bull run's going or how this bull cycle is going per se. But let's go ahead and get into, we're gonna skim some of these probably missed by most news stories that's been going on. And as you know, CryptTalk podcast, the byline on my Twitter has always been, I'm going to show you the crypto and blockchain news that you won't see on the mainstream media yet. Of course, we've been seeing more crypto news on the mainstream media since the ETFs put Bitcoin in the traditional markets and these other ETFs that people are talking about. A lot of institutional value has been recognized by different investing vehicles, Fidelity for one, BlackRock, et cetera, et cetera. So we're starting to see it now because it's not as much as a conflict, but keep in mind, like I always say, you want to learn how to deal with these decentralized protocols, these decentralized exchanges and wallets, so that way you can kind of do your own thing without intermediary interference. But if you don't mind the centralization of centralized exchanges and ETFs or whatnot, it's up to you. But let's go ahead and get into some of this news. What do we want to start with? Start with this one from Decrypt. Crypto industry coveted market structure bills doomed, is what the lobbyists say. The landmark bill odds of passage have been derailed by macro political forces, crypto policy leaders believe. Let's go ahead and skim through the in brief. So crypto policy leaders have become convinced this week the market structure bills are highly unlikely to pass Congress this year. The crypto industry has been pushing for months to get both stablecoin and market structure bills passed by 2025. Now, policy leaders are beginning to wrap their heads around moving forward without market structure legislation, which would create a formal framework for regulating most crypto assets in the United States. Now, this is kind of huge because for years now, there's been talk about the regulation of these crypto assets, meaning like to have across the board way to regulate these cryptos instead of it being like state to state. That way there's more clarity, and that would allow different developers and companies that want to integrate within crypto or create their own products and services to have one even playing field where everybody knows what the rules are. Because I believe that there's a lot of different projects that are on hold until we have a lot of clarity, which is going to kind of hurt the development and innovation of crypto and blockchain. Now, there's probably some political reasons for this, of course. But there should be some financial incentives. And like, you know, I've always said, like, until they find a way that they could really tap in and benefit. When I say they, I mean the government and the financial institutions that regulate the government, then it's going to be kind of tricky to get some of these regulatory things. And I think because of the transparency of the blockchain and unfortunate corruption within politics that may be holding it up. Because you got to think about it. If we were to go all digital, if we were to, for instance, stable coins and things like that, and we were to have all of these transactions tracked on the blockchain, which is an immutable ledger, you can't change it, I think it would expose a lot of corruption. I think a lot of that dark money would be a little bit more traceable. So maybe perhaps that's the reason why they really can't come to terms with this. And because, like, you know, when we speak about regulation and enforcing different laws and cryptos, a lot of times us as consumers, we want the protections in place so that we don't get scammed by the carrot bars and the one coins and things like that. Unfortunately, what I have seen is that with the United States government, they don't really care about the corruption. They seem like they only target the companies that they know they can easily confiscate their assets because they keep those assets. The United States government, I believe, is the biggest holder of Bitcoin because they've confiscated so much. So, you know, there's a lot of different shenanigans and, you know, reasons that I can only speculate. But let's see, late last night, the House Crypto Market Bill passed votes in two committees, prompting celebration on Capitol Hill and statements of confidence from lawmakers that legislation, which would establish novel framework for regulating most crypto activity in the United States, is on a glide path to becoming law. But privately, in the last week, crypto's top lobbyists have come to a very different conclusion for a variety of reasons. The chances of market structure legislation passing this year have plunged to near zero. Anyone who disagrees is either delusional or stupid, one top crypto lobbyist told Decrypt Wednesday. How come? A number of variable reasons to the bill itself and macro political climate are making market structure a near impossible pill to swallow for any Democrats. 5 crypto policy leaders who spoke with Decrypt said. But looming large at the top of the list, Donald Trump's numerous personal and lucrative crypto ventures, which Democrats have seized on as perhaps their most salient vector of attacking the president during his second term. I mean, if we're going to be honest, we have to understand that, look, there's been a lot of framework that has been dismantled that would regulate different scams in crypto and what's legal and what's not legal. And I don't think there's a coincidence that coming into office, day one, there was what was called a meme coin scam ran by the president. Let's just be real. The Trump coin, the Milana coin, like those were meme coin rug pull type situations. So if that's the case, of course, you're not going to make laws that's going to expose the chicanery, you know what I'm saying, that's going on in that regard. So, you know, there's that. Like I said, a lot of this is getting political. But to have an actual regulatory framework would really enhance the ability for crypto to thrive. But at the same time, it would also highlight the failing of the US dollar. The US dollar is definitely slipping. There's a lot of pressure from other currencies, BRIC creating currencies, and the companies within BRIC or the countries within BRIC that are now starting to pull away from the US dollar as the reserve currency and et cetera, et cetera. These kind of things are kind of making it tricky for the leading economy with the reserve currency to want to push forward legislation and normalize the idea that people can forfeit the US dollar in lieu of other currencies, particularly digital currencies like Bitcoin. So there's that. So like I said, it's more safe for them to allow EFTs or ETFs, because if you have an ETF, you're still in the traditional market. You're still dealing with, you know, you're not really dealing with crypto as far as holding it. You're just holding a stock that represents the price of crypto to some degree. So it doesn't really hurt the dollar. But if people really were to just hold Bitcoin on their own and hold these different digital assets, and they could trade those even with foreign currencies, and they don't need the traditional banking system in order to do transactions or to hold a store of value, yeah, that could become a conflict of interest. But let's continue. Let's get to the next story. Here's what happened in crypto today, according to Cointelegraph. Like I said, I didn't pre-read any of these, so we'll see how we do. So you need to know what happened in crypto today. Here's the latest news on daily trends and events impacting Bitcoin price, blockchain, DeFi, NFTs, Web3, and crypto regulation. Here we go. So today in crypto, Ukrainian lawmakers have introduced a draft bill that would allow the National Bank of Ukraine to include cryptocurrencies like Bitcoin in the country's reserves. A slated Bitcoin software update has divided the community, and U.S. House Committee approval of crypto market structure bill. Remember, we just kind of did that one. So let's just start with the first one. Ukraine, crypto reserves, Bitcoin reserves. Shouldn't be a big surprise. Even the U.S. is looking to put Bitcoin in the reserves and the other pools of cryptocurrencies. Some people, there's a lot of debate on whether that's a good thing or not. So for those who are just in Bitcoin strictly just to make a profit, it sounds good to have a whole bunch of institutions and countries buying the crypto. But of course, that makes it less decentralized. And it also centers most of it towards these assets are now being owned more by whales, banks, billionaires, etc. So that kind of, interferes with the original idea of Bitcoin, which was to have a way for blue collar, regular working class people having a way to not have to deal with these centralized banks and these traditional banking system that crashed the economy, which made Bitcoin a thing in the first place. But back to Ukraine, and I've done stories in the past, particularly on Ukraine and Russia when the conflict first started, because they were both using Bitcoin to fund the conflict. Ukraine was using Bitcoin because Russia sabotaged their banking system. Russia was using Bitcoin because the world sanctioned Russia, so they couldn't use the SWIFT messaging system, which banks communicate to exchange and transact funds and assets. So they were both using Bitcoin to fund. And I've done these stories. The link, you could actually just go to the link in this description, go to the Odysee, which is my backup to CryptTalk podcast, which was taken off of YouTube. And I did several different videos highlighting how they're both using Bitcoin. So it doesn't, surprise me that Ukraine is pushing forward with different ways to utilize Bitcoin. So Bitcoin update to raise data limit. We're not going to get into this because we have a lot of different things to go through. Let's go ahead and continue. Trump's consumer protection reform could leave crypto users in a lurch. The Trump administration, supported by major crypto firms, have largely dismantled the Consumer Financial Protection Bureau, leaving consumers vulnerable. This is what I was just alluding to a couple minutes ago. That yes, what they are doing is it's interesting because they're not putting the regulations that would actually help crypto thrive and the innovation to continue. But they are doing different things to dismantle regulations that you would think you wouldn't want to do. But if you're a government that operates with chicanery and shade and you're doing some questionable things, then that's exactly what you would do. And this is why I say, like, when it comes down to the Carrot bars and the Gold Standard Bank and these different crypto scams that I've been exposing for years now. Like I've said before, if they don't really seem too quick to go after these bad actors unless they can confiscate the assets easily, which is unfortunate. So, they're dismantling different things, and they've been doing this since January. So let me see. In a recent departure of a high-ranking U.S. consumer protection regular comes amid concerns that market participations, including crypto holders, are being left to fend for themselves. And this is what it's been kind of like the last several years. This is what I've been highlighting on CryptTalk podcast for years. On June 10th, the Kara Peterson, acting enforcement director of the Consumer Financial Protection Bureau, reportedly resigned with a scathing letter criticizing President Donald Trump's administration, namely the toughness cutbacks at the agency pushed by the Department of Government Efficiency, so DOGE, the Elon Musk headed DOGE. Republican lawmakers in the White House have promised to streamline the CFPB, ensuring it would protect consumers while not stifling innovation. Prominent figures of the crypto industry have also attacked the agency. Coinbase CEO Brian Armstrong called it unconstitutional. The U.S. crypto industry may be championing a weakened CFPB in the bid to win advantageous crypto regulations in Washington, but in the meantime, its own customers are left vulnerable to account freezes and unresponsive platforms with no clear agency to turn to for help. And here's a tweet from Brian Armstrong. 100% the right call. The CFPB is unconstitutional on the face of it. And even if it wasn't, it should be deleted, as we already have DOJ to prosecute fraud and many other financial service regulators. It's not activist organization that has done enormous harm to the country. So, like I said before, man, like, they're not really in a hurry. When they're doing their own shenanigans, when they're doing their own essentially scams, and this is no, like, I'm not making this political to say that I like one party or one politician better than the other. I'm just keeping it a stack. Yes, we know that the meme coins are the biggest scams or the highest risk. Even if they're not scams, they're the highest risk. They're the most compromised form of cryptos, even more so than NFTs. So if you're someone of power and you're making billions of dollars off of meme coins, and you know it's kind of shady, then yeah, you're gonna want less regulation on those type of things. Less regulation, less punishment for market manipulation, or for just straight up rugging these meme coins, because that's exactly what happened on the inauguration day. And I've already covered that. So there's that. Let's get into this. Older investors are risking everything. They're risking it all for crypto-funded retirements. This is also by Cointelegraph magazine. Some older investors are risking everything to dig themselves out of financial holes and have a crypto-funded retirement. The time-honored advice for older people approaching retirement is to reduce your exposure to risky assets to preserve your nest egg. But what if your nest egg has already been destroyed and you need a high-risk return method to make it all back in the space of a few years so you can retire comfortably? It's not a strategy for the faint-hearted. No, it's not. And it could easily go horribly wrong in the event of a sudden crash or prolonged bear market. But some crypto advisors see it as their last best hope. I think your risk appetite would have to be pretty extreme to have all your eggs in any one basket, especially if that's a volatile asset like crypto, says payment consultant and former banker Rod Tasker. I mean, just to put it bluntly and quickly and to simplify it, yes. Especially when we started the year with 401s tanking for the first 3 months, 2.5 months. A lot of people are looking for different ways to recover a failing investing system. And for a lot of people, it's going to be the crypto market. It's going to be Bitcoin. It's going to be these other assets, these other digital assets. People are getting a little bit more aggressive with their investing strategies. And it's seen as a little bit less risky when you have, like I said before, ETFs. You have different retirement funds that are now adding crypto. Japan's biggest pension fund included Bitcoin just a couple years ago. So even though it is more risky, it is becoming more normalized as we see adoption starting to increase and institutional investment starting to increase. So now we have older, more classical investors now looking to get into this asset that once they would not touch. And we're going to continue this trend. If the older folks are doing it, like you already know, the Gen Zs, those who were born with the iPad in their hand, with a smartphone in their hand, who already are used to doing digital transactions via Venmo and PayPal and Cash App, etc. Yeah, they have no problem with the crypto. It's just another way to digitally hold assets and do transactions. Even if you're not doing a transaction via crypto directly, there's so many different ways to on-ramp your assets to a Visa, MasterCard to do these transactions. So now we're seeing that some of the old folks, they're willing to risk it all because they're like, hey, we have nothing to lose at this point. I get it. I'm not mad at them. Let's get to this one. Switzerland green lights sharing crypto tax info with 74 nations. Now, like I said, I haven't read this one either. I assume this isn't a good thing for those who, I mean, because Switzerland has always been like the neutral, hey, you want to hide your money off the record type of deal for banks. Then, you know, it was a safe haven for those who wanted to kind of be off the grid. And now they're saying they're going to snitch. Let's see. See what they're saying. Switzerland is moving forward with plans to automatically share crypto-related data with 74 partner countries, including the United Kingdom and all European Union member states. The Federal Council, the government of Switzerland, has adopted a bill to enable automatic exchange of information. Jeez, on crypto. Why are you snitching, Switzerland? Huh? Let's see if the U.S. is included in this. The proposals suggest sharing data with most G20 countries. The measure includes the United States, Saudi Arabia, China, according to the expose by the Swiss federal government. You guys are now snitching. Now, here's the thing. Here's what I don't like about this. Because here's the dichotomy of crypto and blockchain technology. Of course, we know that you can anonymously do transactions. And if you know how, you can privately do these transactions, or at least you can lessen. Because at least like you're unless you're using a centralized wallet like a Coinbase wallet, Binance or whatnot, your wallet does not have your personal information attached to it. Now, are there ways forensically that they could really deep dive and go into, depending if you make a mistake or not, or how you utilize or cash out, or, you know, yeah, they can kind of track it. But if you know how to move, then you can wiggle through and lessen, you know, the odds of them being able to do so. But now they're saying, but if you're, like I said, if you're using a centralized wallet, yeah, they can get all your information because Coinbase is going to snitch. If the feds hit up Coinbase, like, hey, who has this wallet? This is the Coinbase owned wallet. Who's the one that's utilizing this wallet? They're going to tell. And the Swiss is saying they're going to tell. Here's what I don't like about that. What I don't like about that is they're not doing it for the traditional banking system. They're not saying they're going to snitch for those who are for the big wigs, because it's mostly rich people that are holding these large amounts of sums in Swiss banks. They're not snitching on that. They're going to snitch on the crypto. I don't like that. Do not like that at all. Okay, here we go. One more thing. Two more things. Why Circle's super positive IPO could be bullish for Ethereum. Before we even get to that, let's get to this real quick. So yesterday I'm at the poker table, last night I should say, and I do this thing called point of view, POV, poker porn, where I'll share in shorts different hands that I play, you know, that I went through in poker. So I, you know, I have a big hand or something, you know, I'll record it with my Meta Ray-Ban glasses and I'll load it up. Most of the times I actually put on my Facebook stories, but, you know, sometimes I'll remember to put it on Blockchain Crypto Gang. And, you know, I'll show you some of the hands that I play or how they went out, how they ended up. But yesterday, I'm playing poker. And I noticed that one of the guys to my right, he has a card protector. And it's an Ethereum. And I'm like, and I've seen this guy before. He doesn't speak the greatest English, but this is part of the exchange that we had. So as you can see, that's the Ethereum symbol. So this is what he uses to cover his cards, so they're protected while he's in the hand. 2,800, which is about where it's at right now. Yeah. So, you know, just so one thing I've noticed, and if you follow CryptTalk podcast back in the day, you know, I would sometimes record when I'm at the poker table. And at first, when I first started getting to the crypto, no one knew what Bitcoin was. If you ask people what Bitcoin is, no one really knew. Very few people knew. As time went on, I would be able to have conversations about various cryptos at the poker table. So now it's more of now it's like everybody knows about Bitcoin, of course. And I'm noticing, you know, I ran into a guy who had a Binance hoodie on. So, you know, it's starting to really open up, and the mainstreaming is really happening. The mass adoption is really starting to happen. But let's get back to this story right here. So bullish for Ethereum. USDC's concentration on Ethereum is bullish for the network native asset. Analysts say more than half of USDC circulating supply exists on Ethereum, while layer 2 networks and other scaling solutions support major accounts as well. Ethereum's name will inevitably rise as investors research Circle business model post IPO, one analysis said. And I really think that Ethereum, as many people have said, is going to do great within this bull cycle. Like when we really start to see price action move, Ethereum is going to do very well because a lot of the different real world assets are coming to Ethereum. Of course, you have, these stable coins that run on Ethereum, a lot of development, a lot of institutional use. You have ETFs and all these different things that are coming. So Ethereum holding so many different tokens that's going to have to utilize Ethereum. I think we're going to see the Ethereum move past the last all-time high, which was about 4,400 or so. That's what I would think. Although Circle issues its USDC stablecoin across more than 40 different networks, more than half of the stablecoin circulating supply exists on Ethereum, totaling 36.7 billion, according to crypto data provider DeFi Llama. So, of course, there's a real big case. And I do hold some Ethereum tokens as well as Ethereum. But yeah, we're going to see Ethereum. We're going to see the top dogs, I believe, do well. So like even if you're a conservative crypto investor, which would still be a risky investor by any other standards, even if you're a conservative, and when I say conservative, I mean blue chip cryptos. I mean the Litecoins and Solanas and Ethereums and Bitcoins and these coins that aren't likely to 100x. Bitcoin's not going to 100x, okay? We'd be lucky if it 3x's or 2x's or gets a 75% top. Ethereum might double. But what I'm saying is those are great returns traditionally when it comes to investing. Now, for those who are trying to go for the gusto and those who, know the potential of some of these smaller market cap coins that can 100x, that can 1000x, it doesn't seem like a lot. But trust me, it is. Like that's where, especially if you don't really know how to deal with these decentralized protocols, like I said, because if you don't, you won't be able to get some of these coins that could 100 and 1000x, and those are high risk. But if you just wanted to play it quote unquote safe, then get the blue chip, get the top 10, top 20 in market cap type of coins. And hey, you'll see, or you should see potentially, if history repeats itself as far as the bull cycles in regard and its relationship to the halving, you're going to see very good returns just on the blue chip alone. You're going to see returns better than the stock market would typically do, is what I'm saying. So news like this just kind of reinforces my faith in that kind of thing, right? And then we got the polygons, which is layer 2, base. So we got a lot of development that's going on. Solana, of course, they have a lot of different things. I do hold Solana. Anyway, let's continue. Let's see what we're looking at with the Chinese. Should we even go into this one? This is some XRP reserves. So Chinese firm Weebus stocks jump after filing with SEC for $300 million XRP strategic reserve. The move is indicative of rising institutional interest in Ripple's XRP ecosystem as firms seek to integrate blockchain payments into their operations. Now, why would they want to deal with XRP when it comes to payments for their operations globally? Well, because XRP is instant and XRP is essentially free. So think about it like this. And I've used this example before. So I have 2 different bank accounts, right? And for the longest time, what I would do is every paycheck, I would have a certain amount from my direct deposit moved to my other bank. So direct deposit into one bank, and then from that bank, a certain percentage of that direct deposit would be transferred to my other bank just for savings. So this would typically happen on a Friday. The transaction wouldn't be complete till Monday, or excuse me, till Wednesday, because it's about 5 business days. The weekends don't count. So why would it take 5 days, right? Because is it that there's a courier going to my bank to pick up the money to drive it to the other bank, and that's what's taking 5 days to happen. Of course, that's not what's happening. All they're doing is updating the ledger. That's all they're doing. But they're doing it on an outdated system. Bitcoin only takes about 30 minutes to update its ledger, meaning like when I send you, quote unquote, send you Bitcoin, I'm not really sending it to you. All I'm doing is updating the ledger to reflect minus what I'm sending you on my ledger plus what I'm sending you on your ledger. And that whole operation, that whole transaction takes about 30 minutes to confirm, because it's a more efficient system using blockchain. Now, of course, Bitcoin is a slower blockchain. So when you're dealing with XRP, you're dealing with instant reflection of the transaction or the updating of the ledger instantly and free. The traditional market, if you want to send $1 billion, it's going to cost you a lot, and it's going to take you a minute. And if you're doing international business in the millions, hundreds of millions, or billions, and you're doing a purchase or an exchange or something like that, just those days, the reflection of the market changing and currency values changing, it can make or break a deal or make a deal less lucrative. And it can also hold up those funds that you could be using immediately if you're using blockchain technology, particularly on XRP. So that is the thought of why these large institutions, countries, and whales or whatnot that are doing big international business or even national business, this is why they're looking at blockchain as a solution, because it's a lot more efficient. It's cheaper, it's faster, it doesn't hold up your money, and it's even more secure, by the way. So China-based WebBus International plans to build a $300 million XRP-focused corporate treasury as per a recent SEC filing. WebBus intends to use loans and credit facilities for funding, integrating Ripple's payment network to enhance cross-border payments. Now, we've been hearing about all these different banks globally that are looking to tap into the XRP blockchain. XRP has seen some movement within the last year. It's not anywhere near what a lot of people expect it to go to $5, $10 per. But news like this doesn't hurt, right? Not saying that it's going to necessarily immediately affect it, but I mean, when you see these type of things happening, these type of developments and integrations or whatnot happening, then you can expect that it's going to undergird, it's going to build a solid foundation for when these bulls really start running, that XRP should shoot up. But of course, we've been waiting for that for a long time. They've been going through this lawsuit that they went through, that they did win during the last bull cycle. So we'll see how it goes. But, you know, as you could tell, the interest of XRP is increasing. Okay. And this is typically how it goes. You see these different developments. You see these different news that happens with different companies developing things or integrating things, or traditional markets wanting to kind of, you know, mesh the traditional markets with the incoming blockchain technology. We see these kind of things happen, and we don't really see any movement price-wise because of it. But then when the bulls really start running, all of these different things that's been happening, you know, out of sight, not reported by the mainstream, it all factors in to the bull cycle at some point. So just keep that in mind. It's not financial advice. I'm just sharing you these stories and giving you like my take on it, an insight of why these kind of things are happening. The announcement follows Vivo Power International's plan to build a $121 million XRP treasury, indicative of growing interest from corporations in the fourth largest token by market cap. Let's go to the previous paragraph. Weebus plans to integrate Ripple's payment network into its business, aiming to streamline cross-border payments and improve booking transparency across its global chauffeur services. So here we go, man. These are the kind of things that's happening in the crypto streets, on the blockchain, on the block, gang. So there's that. I just want to, you know, catch up with some of these things that's going on in the crypto news. So tap in, make sure you like, subscribe, comment, all that good stuff. You know, listen, I'm not going to tell you what to invest in, right? That would be irresponsible of me to do so. But I will say this: if you're not putting your money to work, it's going to be hard to survive in economic times like this. Saving is just not going to be enough. And I'm not, you can look at different stocks, but you should have some type of way to make your money work for you. Right now, what we have with technology and blockchain technology, specifically in the digitalization of assets, we have the opportunity to do things, especially in DeFi. If you're familiar with DeFi, we can do the type of things that these billionaires and these large investment firms do already, and that these banks do. We can now mimic and utilize tools that are not unlike and probably even more efficient and a lot better than the traditional market that was only really meant for billionaires and banks. Of course, it's going to be scaled down to what we have in assets, but now we can utilize some of the same methods. You'd be a fool not to take advantage of that. Gang, blockchain. It's my crypto slang. Appreciate your time. Peace.